Okay, welcome. So today lesson will be focused on LO3, which is be able to apply the taxation planning measure to minimize or defer the tax liability. So that will be the tax planning. Tax planning is illegal. So in the previous lesson, we discussed about professional behaviors, professional competencies, parent subsidiary companies. Today will be focus on LO3 and we'll go through. So please, whatever we do, always good to be within Finance Act. What are the options available according to each year, which we can look around the Finance Act and we can follow accordingly. That's really we need to look around every year. Okay, so all these are the rates which we can apply. So 3.1, we've been given evaluate types of investment and expenditure resulting in the reduction the tax liability. Since most of the company pay the tax, the impact on the corporation tax must be considered in any investment appraisal. So we can appraise the which way we can and the performance as well. Corporation tax charge on the company's profit, we can relevant to the cash flows, and NPV, which is you already learn about NPV, net present value, in other subject area as well, which we can look around. Impact of corporation tax charge on the operating flows, additional income, additional tax paid, additional cost less the tax paid. Tax relief investment, yes, which we can write written down allowance, which we can look around according to each year and the asset pool, which where they fall. Okay, impact of the taxation on the discount rate used when calculating the weightage average cost of capital, cost of debt, should always post tax figures, has been adjusted the tax relief on the interest. And this is normally like depreciation is not allowed expense. We're looking more about what is the written down allowance which we can claim. So because every asset, first year investment, second years, and tipper reliefs and things, which we can look around. So taxation, deduction, alternative, depreciation, the effect of these, reduce the amount of the tax which we'll carry on. That's why some company, they have, a good turnover, but their tax bill is quite little because the reason they are claiming the money which they are entitled to do, especially capital expenditure, the money we spend on the capital asset, and we can claim the capital allowance. So in practice, effect of the taxation are complex and influenced by the number of factors: the taxable profit and the tax rate, the company accounting period and the tax payment dates, capital allowance, losses available, set off, and we can many of these issues ignore or simplified the purpose of NPV investment appraisal as well. Okay, so then capital return allowance, which we can look around. For the tax purposes, a business may not deduct the cost of an asset from the profit on the depreciation, but we can look around the financial accounting purposes. Instead, the cost must be deducted from the taxable profit in form of the capital allowance, which we can, if you can change your policy for the depreciation. You want straight line, you want diminishing balance method, whichever method. But for the tax purposes, we stick with the rules, which is given written down allowance, asset being sold, who own it, the ownership of the asset. That's all, which we need to look around. Okay, so original cost of the asset, cumulative capital allowance claimed, written down value of the asset, and disposal value of the asset if we have a balancing allowance, and we can claim, whatever, and we can look around according to the category of the asset, which categories those fall short life assets or ban pool assets. Okay, so this we can look around asset are assumed to be T0 and could be very end of the accounting period. So at the start and other accounting period. So asset at the start of the accounting period, we can proportion them according to the time period as well. So be careful because sometimes asset we only held. So first year, second year, so we need to be look around and proportion our tax purposes accordingly. These are some examples which we can look around. Okay, so asset bought at the end of the accounting period. Yes, so first year of ownership, asset purchase, first year written down allowance claim from the profit earned in the period and in the year, but second year allowance, yes, again the profit earned in the period and the third year and so on. And then balance carry forward and brought forward can be. Okay, laying out the long NPV question for, the majority of the investment appraisal question in exam. Of course, you're not doing exam. We're looking more, it's assignment where is, we can add the example. We can look around the example from ACC articles, and I'll give you some examples from our different books on taxation. But if you want to test your understanding, is one of the quite good website, which I can copy the link for you here. If you want to, please show you. Please show you. These are quite good. So here is the link which I can share with you if you want to, just for the sake of different scenario, and we can pick some scenario. We're looking, because it's quite mixed subject, business and personal tax element, because individual and businesses. Can you see all? Yes, please. If you have a question, you can ask. So here, the link, when you click that, if you want to test your understanding, so at the end it will shows you answer, let's is for suppose, yeah, you're right and wrong, so you can carry on playing. That will help you. Yes, at the end also shows you, so you can move around. Yes, so there are different scenario, you can pick it, you can quote the examples. These are all, and it's good to enhance your understanding about the taxation according to the Finance Act. Yes, these are the different examples. You can pick the business tax, and you can pick it individual. Okay, so that's quite good to look around. Okay. Then when we have a pension and other tax efficient investment product, we can look around, these, which will is the beneficial, and how we can, because always tax saving and the government schemes, always we need to look around enterprise investment scheme. This scheme, tax relief, seed enterprise, investment scheme, which we can look around, these relief available, venture capital relief. So these, different projects, sometimes government can offer the special in certain sector, tax reliefs as well. So trading losses, as we discussed in the previous lesson, can be carried forward up to 5 years. And the relief, again, the total profit before, which we can look around the years. So must be claim again the profit, and we can look around again the 12 months. Claim optional and don't have to made, the partially claim not possible. So for example, if the total profit before that is 56,000 and the trading loss is 60,000, so what we can do, we can claim 56, and 4 loss will be remaining, and that can be moved to the following year. Okay, carry forward relief. The trading losses are automatically carry forward if the grant and carry back, the claim have not been made, which we can go forward and backwards. Yes. So trading losses can be claimed from those years. It's better to be claimed from the early years profit. So we'll carry on the remaining, because the 5 year period not really lose. Okay, so you will see here 3 corporation tax. Yes, losses performance. We can look around 2019, 20s, 21. If we have trading income, other income, net chargeable gain, if we have, and the total profit, and then we can look around the current year's profit, what we have, carry back or carry forward the losses can be. And we can, but try to be at least, because the first year is good if you have that. If you have a previously we can, if we can forward, but we have some outstanding liabilities, we can adjust. Okay, so the year end is 31st December is the loss making year in this pro forma, and the form losses is the set off again the total profit before the the year at the previous, which we can make adjustment. Alternative losses may be offset, yes, total profit again the current, carry forward again the profit can restrict or above, yes, because depends upon your limits, which will go through some example. Short previous accounting period, the losses can be carried forward back 12 months. That usually means the loss can be deducted from the profit of the previous accounting period. However, if the previous accounting period is less than 12 months long, it is possible to carry the loss back to the cover the portion of the profit, yes, and the preceding, which we can 8 months, 9 months, and we can do allocations accordingly. Okay, the factor to be considered when to main consideration that the company want earlier relief, maybe this year and the future years. Yes, you want to be, because the cash flow issues, that's why you want to make adjustment accordingly. That's which will carry on doing, and that's we need to be look around according to the tax planning. What suits to the client. Capital losses automatically relief against the current period charge gain. If we have any excess, we can carry forward and relief, we can against the gain in the future, and that carry back, the relief available. Okay, 7 research and development expenditures, which we can tax credit, yes, apply to the small and medium sized enterprise. SME deduct additional 130% of the qualifying expenditure for the tax purposes. For suppose, if you £100 spend on R&D, allowable deduction is 130, and the tax relief if you have original, and then yes, 230 of 100. So these are some examples which we can look around. Deduction create, and the losses may be surrounded to the cash payment from HMRC can be, so which we can look around special law against those, the companies are the years, because IRS 35 we discuss anti-avoidance legislation, often called IR 35, after the press release announcing the legislation. Personal service companies usually have the just the shareholders who use companies to provide his her services to the client. Legislation PSCs, yes, which we can look around the use and and employment relation, and the tax, and the NIs and all these special arrangement which we need to be umbrella companies, even a lot of discussion on these. The client, the owner, see, and the workers, yes. So the legislation applies relevant to, and these are the recently been are is a few years now in few areas. So if IRS 35 apply, the client company is not affected. The PSC is treated income from the relevant engagement arising the tax year, and NI the income and tax notion salaries, and treat notion salaries as paid at the end of the tax year, and only deduction actual salary paid and expenses and allowed implies plus flat rate 5% deduction. Okay, so please, that's we can further explore, which we can look around according to the scenario. And next we need to be look around 3.3, which is evaluate the mitigate the tax individual and the business. When you providing the tax planning advice to the client, you are fully responsible to advise. You give fundamental principle, we know those we need to be follow, the professional competencies and due care is up-to-date knowledge. Anything you recommend must be legal, of course, in the law. Tax avoidance or tax evasion illegal, yes, so we can look around, and ethically morally is correct as well, not just only legal wise. HMRC might disagree with your conclusion, as the tax consequences you need to be explained the client and full details given to enable HMRC to consider the matters. And of course we know we deal with it, yes, so we can different scenario can be tax in is attempt to, of course, hiding fundamental integrity is very important, where we can look around criminal charges can be if we break the law, but following responsibility client falls, provide formal request, by you in the example of preparing the return tax calculation and returns, yes. So we can consider whether you continues to act for the clients. Yes. Of course, we know we need to notify to HMRCs and all other legal obligation which we need to explain to clients. It's a professional duty of care, of course, client and the seriousness it is. So always it's good to be, sometimes it's difficult to protect the interest of HMRC and you're dealing as a middleman. So we need to be looking on and use the professional judgment. Yes, promoter the tax avoidance scheme relating to direct tax, income tax and all have the disclosure obligation, notify the request promoter arrangement and propose, which can be tax advantages. It defined as a relief or increase the relief from the tax. Repayment increase, repayment of tax avoidance, yes, or reduction of the tax. So we can look around, the penalties can be not exceeding the 5,000 and not exceeding the 6,000 each days can be, which if we know. So we already discussed about different schemes, avoidance, maybe you not notified, it can be create, the problem. So we need to be make sure we'll carry on doing it, and carry on following accordingly, yeah, according to the scheme and the rules. Okay, serial, yes, of tax avoidance can be because HMRC can investigate further. So we need to be all the documentary evidence. It can be, otherwise it goes through to tribunals. So we need to be look around. When we'll do 3.1M, we can look around ethical and professional issue arising the tax planning. Ethical, we know the professional code of ethics, prospective client, tax irregularities, money laundering, and tax avoidance scheme, yeah, direct avoidance scheme, where and these, different we need to be follow accordingly. So when we look the ethics, we know the integrity, objectivity. We discuss about popular people chat in offices, professional behavior, professional competencies, confidentiality, integrity. And we use, thread, these are different threads, self-review, self-interest. These, we supposed to be, we can't charge the contingent fees. We discuss, tax avoidance, direct tax avoidance scheme. Yes, promoter must, disclose something tax payers and main benefit to the scheme is obtain, advantages in relation to the tax. We can look around penalties above or less, those we can follow. And these are all the rules and regulation which we need to look around in term of whatever the scenario accordingly. And we need to be look around the legislation, those. And okay, so we included some threats can be self-interest, self-review, either you member in practice or member in business. We have to look around self-interest, self-review threats. We need to be draw the safeguard, familiarity. If you're dealing intimidation, like your maybe boss say, come on, if you don't submit it, we have a problem about the cash flow. It can be intimidate. Of course, you have to use the professional judgment. What is safeguard? Always we have to draw the safeguard policies, procedures, documents, vouchering system, SOP, standard operating system. Those, we need to be designed to protect. Okay, then we have a 3-point current issues in tax, so we can pick, various issue. Your manager receive an email from this, the scenario which we can look around and we can add, according to, it can be different scenario here, current issues in taxation, it can be tax avoidance, different scheme, MNSTs, tax and various others, so we need to be make sure we pick, and when we'll do these our assignments, so we can pick, one to issue an example. So these are some you've been given in terms of the property income, share income, indexation, different, times you bought that share, and we do the taxation purposes only. Yes. So we need, of course, knowledge obtained from advising others, clients, investment in various companies, like in these few example we included in which we can look around. Of course, we can look around the residencies. These questions are the scenario we pick from ACCA old exams. Huh? So which we can use when we'll do assignment. So we can pick, one or two, which we can add in our assignment to address, our distinction criteria. Any question, please, from anyone? Yes, no? Can you hear me okay? Yes, please. Anybody, any question if you have? So today we just discussed, our LO3, and next lesson we'll go through remaining our LOs and we'll do assignment discussion following week as well. If you have, so please, if you want to look around, as I in the chat box I copied, so it's good to be look around the few scenario, just yes and no question that will help you, and those we can pick two, three example if you want for your assignment purposes. Yes, according to the scenario, just think about tax avoidance, tax planning. Yes, and look around ethical and moral side as well, and legal. So these, which we can look around. Any question? So that's all from my end. If you have a question, you can ask. Otherwise, we'll keep up to here. And next lesson, what we'll do, we'll go through our next LOs.
Thank you.
Thank you. Have a nice weekend. Thanks for attending. Sorry for I was a bit late. Thank you.
All right, cheers. Bye.
Thank you. Bye-bye. Bye now. Thank you. Thank you.